Welcome to Trader Wall, the online university of trade that you need. In today's video, we'll break down the essential words and terms every trader and investor needs to know. From the basics like stocks and bonds to advanced concepts like leverage and diversification. So pick up your notebook and take notes. Introduction. Trading and investing are full of specific terms that might seem overwhelming at first, but mastering them is the first step to becoming a successful trader. In this video, we'll explore the essential words and phrases every trader needs to know, from basic concepts to advanced strategies. Whether you're just starting or refining your skills, understanding these terms will build a strong foundation for navigating the financial markets. General trading concepts. Let's begin with some foundational concepts. Trade. At its core, trading is the act of buying or selling financial instruments like stocks, currencies, or commodities. Every trade has two sides, one person buying and another selling. Stock. A stock represents ownership in a company. When you buy a stock, you own a piece of that business and may benefit from its success through price appreciation and dividends. Bond. Bonds are fixed income securities that governments or corporations issue to raise money. They are considered safer investments compared to stocks because they often provide steady interest payments. Index. An index measures the performance of a group of assets, like the S&P 500, which tracks the 500 largest companies in the US market. Indices are often used as benchmarks to gauge market performance. Investment vehicles. Understanding different investment options is crucial. Mutual fund. A professionally managed fund pooling money from many investors to invest in stocks, bonds, or other securities. It's ideal for those seeking diversification with less involvement. ETF. Exchange-traded fund. Similar to mutual funds but traded on exchanges like stocks. ETFs are known for their flexibility and lower expense ratios. Option. An option gives the holder the right, but not the obligation, to buy or sell an asset at a specified price before a certain date, offering unique risk management and profit opportunities. Future. Futures are contracts obligating you to buy or sell an asset at a predetermined price at a future date. They're popular in commodities and stock market indices. Trading styles and strategies. Next, let's look at some trading approaches. Day trading. This involves buying and selling financial instruments within a single trading day. Day traders capitalize on small price fluctuations, requiring fast decision-making and risk management. Swing trading. Swing traders hold positions for several days or weeks to capture medium-term trends. This style combines fundamental and technical analysis. Position trading. A long-term strategy where traders hold onto investments for months or even years, focusing on major market trends. Analytical methods. Understanding market analysis is vital for successful trading. Technical analysis. This involves analyzing price charts and patterns to predict future market movements. It's essential for traders looking for entry and exit points. Fundamental analysis. Focused on a company's financial health, this method examines revenue, profits, and market conditions to determine intrinsic value. Market trends and dynamics. Markets often follow trends that traders need to identify. Bull market. A condition where prices are rising, often driven by optimism, economic growth, or strong earnings. Bear market. A market experiencing prolonged declines, often signaling caution among traders. Volatility. A measure of how much and how quickly prices change. High volatility often presents opportunities and risks. Risk and reward management. Effective trading balances risk and reward. Risk. The potential loss you might incur in a trade. Good traders always calculate risk before entering a trade. Reward. The potential profit from a trade. A good risk-to-reward ratio is essential for long-term success. Stop loss. A predetermined level to exit a trade and minimize losses. It's a crucial tool for risk management. Take profit. A level where you close a trade to lock in gains. Market liquidity and participants. Liquidity and market participants shape the trading environment. Liquidity: how easily an asset can be bought or sold without impacting its price. High liquidity is favorable for traders. Market maker: a firm or individual ensuring there's always a buyer or seller in the market. They maintain liquidity. Broker: the platform or intermediary connecting you to the market. Choosing the right broker is key to your trading success. Diversification and portfolio management. Building a balanced portfolio reduces risks. Diversification: spreading investments across different assets to minimize risk. It's the golden rule of investing. Portfolio: a collection of investments like stocks, bonds, or ETFs tailored to your financial goals. Asset allocation: the strategy of dividing investments among asset classes based on your risk tolerance and time horizon. Order types and execution: executing trades effectively requires understanding order types. Market order: executes immediately at the current market price. Limit order: sets a specific price to buy or sell an asset. Stop order: automatically triggers a buy or sell once a specified price level is hit. Trailing: stop order: moves dynamically with the price to secure profits while limiting losses. Additional terms. Finally, let's differentiate between key roles. Trader: an individual actively buying and selling in financial markets. Investor: someone focusing on long-term growth and stability through thoughtful investments. Conclusion: trading terminology forms the language of the financial markets. By mastering these terms, you can approach trading with greater confidence and clarity. Whether you're a beginner or refining your skills, understanding these words empowers you to make smarter decisions and grow in your trading journey. By understanding these concepts, you've taken a big step toward becoming a more informed and confident trader. If you found this video helpful, give it a thumbs up and share it with others who are starting their trading journey. Don't forget to subscribe for more in-depth guides and insights into the trading world. As always, thanks for watching, and we'll see you in the next video. Happy trading!